Okay, let's make a brief study on TGB, a stock that I know more or less well. And well, this is the chart since the IPO, since 2004. The stock was kind of dead here until late 2005 when it had this big jump here from about 1 to 4. And then it retraced about 50%. It traded sideways here, and finally here in April 2007 it broke out to a new high. As you'll see over this medium-term chart, there was this trading range, quite annoying really, and then this breakout, but a very shy breakout, retest of the 50 days moving average, and today it is breaking out of this high, as we can see over this short-term chart here, making a short-term breakout today too. So technically the stock is bullish. I like it technically, but not fundamentally, unfortunately. Let's check it here. Okay, we have the share price now at 3.66, the share count at 129 million shares, and I put here a dilution factor of 20% because this company has that history. Look here how they increase the share count over the years. Okay, it was in 2002 they had 33.9 million shares, then 53.9, then 94.8, then 103.5 in 2005, and 128.4 in 2006. So the market cap rose a lot more than the share price did with this increase in the number of shares outstanding. And I also didn't like when they reported, I guess it was Q3 earnings or Q4, I can't remember very well, but they were reporting in Canadian dollars but didn't say so, only in very, very small letters, and that changed some things. So they like to mislead investors. But let's move on. With this 20% increase in the number of shares outstanding every year, we'll get to 2009 with 223 million shares. Initial revenue, this is the revenues the company had over the past 4 quarters, 172.6 million. And revenue CAGR, I expect 36% going forward because that's the recent history. Let me put here. Okay, there were 75 million in 2005, fiscal 144 million in 2006, and about 180 million expected for 2007, fiscal 2007. By the way, let me check. I'm saying 180, but I guess I didn't check that out very well. Just a second. Okay, let me see if there are estimates for this. No, there are no analyst estimates. So I say 180 million because they had, let me see that again, here at quarterly. Okay, they had 48 million here in 2000 in Q4. Now I'm counting on. Well, they had 48 million here, then 51 million, so perhaps more like 200 million in 2007. But that's my 36% revenue CAGR supports that. It is even a bit higher than that. And this is for the next 3 years, so perhaps I'm even being a bit optimistic here. With this 36% growth, we'll get to 2009 with 434 million in revenues. Net profit margin has been 20%, and I expect that to continue. This is a very healthy net profit margin. And this leads me to 86.8 million net income, which translates into 39 cents per share. And but the copper industry trades at a very low multiple of 11 times earnings, as you can see here. This is copper. I don't really know why. I guess this is because copper isn't such a rare metal as gold or platinum or stuff like that. So the PE of the copper industry is 11.2, and that's what I have in my valuation model. Given this, the stock will be at $4.37 3 years from now, and this means it will rise about 6% a year. And so that's not attractive because I look at least 16%, so 6% not attractive. About the just below the market average. So on a 1 to 10 scale, I give it a 5. Thanks. Bye.